Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Morning, everybody. Sorry for the slightly late start. It is 8:30 a.m., 8:33 a.m. EST. This is Cowboy, aka Nick, and we are looking at the euro. So the euro has been a very interesting chart going back to, the beginning of the year. We had a massive move up, and many think that this move up was engineered or as a result of panic that's been happening due to geopolitics. But we'll probably keep that a little out of the conversation. Just know that this has been a forced move up in the euro versus the dollar. The euro was right around parity at the beginning of the year, so €1 to $1. It made its way all the way up to $1.18. That's massive in currencies. That's an 18% gain. That's huge. And that was right halfway through the year at the end of June. So almost exactly 6 months, it went up 18%. In the world of currencies, that is a very big move. And it isn't like that kind of move hasn't happened before. If I go look at the high time frame, you'll notice that it happens once in a great while. It happened back in 2021 or 2022, I should say. And that was a result of the pandemic having it go down, and then the war starting over in the Ukraine, pushing it back up. We saw it here in May of 2020, again, kind of related to the pandemic. We saw it happen in December of 16. So it does happen every few years, but this particular move has been harder up than any of these moves based on certain metrics, if you will. It's moved faster, harder, and it's basically, from what I can see, a false move up, and it's starting to wear out. So the real question is, on a very high time frame, whether it has the gas to continue or whether it's going to head down. And right now, what we're seeing are some lower highs, but it just won't give up. And I'm not really big on trend lines, but what you can see here is the trend lines can work depending on if you're looking at particular, like old school trading patterns. And if nothing else, what we could say, without trying to keep it precise on this trend line, whether it's precise or not, we are seeing lower highs. Lower highs are an indication of this asset getting tired, right? So basically running out of steam, and I'm trying to find my arrows and it's just not happening. Give me a second and we'll use these ones. So we got this lower high, that lower high, that lower high. That means that the bulls are continuing to push up, but the bears are pushing back sooner. And this is on a high time frame. That's on a daily chart. But for the moment, if we go to a lower time frame, what we're noticing is that price is being pushed up. So while the forces are trying, and I mean the market forces are pushing this down, the dollar is getting stronger, the euro has had its moment, and it may continue to have a moment. But right now, you do see a bit of a push up right here, a strong daily candle here yesterday. And you see also a massive bullish engulfing right here, going back to candle theory, going back to the old school stuff. So we had a kind of a scare down here where the euro came down, grabbed liquidity on the way up right here. Okay, so we'll mark this path a little bit, make it a little bit easier to understand. Price was heading up, made a pullback, continued to head up, right? And as it did that, it created a bit of a liquidity area. It created an area where price may come back down to grab liquidity on the way up, or it might grab that on the way down, right? But usually it wants to grab on the way up. We've seen it before plenty of times. You see it back here. Price was heading up, came down to grab some liquidity, headed up, grab more liquidity. It's a common thing. It's just the way the trends work. Well, in the meantime, what we're seeing now is whether or not this next potential move up just failed, right? So a little bit of a lesson here, and don't worry, we'll get into Bitcoin and everything else, but price goes up, pulls back, goes up, pulls back, goes up. And when it does that, this is pretty typical, you get these liquidity zones where price came back down and it created these little areas. And it tends to want to go back down to those areas. As you can see, price came back down in this little example. Now it might go down here, might go down here, but either way, it's going to go into this square right there to grab liquidity on the way up. And we're now seeing at some point that trend's going to fail. Nothing goes up forever, and then it looks like it's grabbing liquidity, but then what it does is it fails, and you get a downtrend a lot of times. Now, it might go sideways before it goes down, but in the end, that's basically what it looks like, right? So if we compare this hypothetical example to what's really going on, we're possibly at a point, and this really remains to be seen, whether or not the euro is going to fail right here and head down, right? Or it could go a little bit higher but still fail and head down, right? All these things can happen, or whether or not it's actually going to continue up and make new highs above 118. And that could happen, and then it might come down and grab liquidity in this area, right? Now, looking at the very high time frame, it really could go either way. And so these are much higher time frames than I even trade. So if I were to look at the low time frame, we are looking at some pretty considerable bullishness right now. All of the moves down are being eaten up. As a matter of fact, this is an interesting look here. We have what is effectively a head and shoulders on the, we'll go to the 30-minute to map it out. And this is a pretty powerful pattern that gets used. It's not the cleanest, but let me see. The only, well, yeah, okay, yeah. It's not a head and shoulders I would trade, not using those metrics, but it is an indication of a move continuing up. And so the way I would draw this out, this is what's called the head and shoulders bottom. Some people call it inverted head and shoulders. That actually is not appropriate, although there is no real agreed upon language with trading. But you know, that's starts to get into the minutia. But this move up might sustain. And the real question is, if someone were able to take a trade using this data, now that some news just came out, now that we just got some data on the GDP and the unemployment data, the U.S. data is now out. We might see an opportunity, if there is a pullback, to catch along on this. And how high would I go? Well, there's the obvious choice right here. This goes beyond the head and shoulders metrics. Again, I don't like this. Well, actually, this is a downward sloping head and shoulders. So this is a good one to trade. Take that back. So if I were to use the targets that we use on head and shoulders, then I would be looking at this target right here. And we just met that first target. So if I were awake in the middle of the night, I might have caught that head and shoulders. And yet there is still time left to go to this target here. There's a little bit of structure, but it's right there at that structure. So I might front run that just a hair. So not a bad trade. Let's take a look at the algos really quick. Not the worst trade right here. This might be worth a move here. If I were to go to a lower time frame, just a way to construct a trade here. And I wouldn't have been able to get into it earlier because of the news coming out. So I might have wanted to do this, but now we do have a bit of structure because we saw the pullback, not quite to the neckline, but we have some structure right here. So we could theoretically go in a trade like this. This is not a 1-to-1. It's a little better than a 1-to-1. So technically it's like a 1.25 to 1. It's takeable. I prefer a little bit better of a risk to reward scenario. So watching this, I could look for it to pull back a bit and then enter. Should I be interested in this trade? So it's, you know, it's there. Now I tend to look for opportunities like this and scalp on a lower time frame, but this is as good of a trade as any, really. So, you know, there is that whole thing, right? All right, good. So that's the euro. Now, if we look at the Swissy, it's just going to be the opposite. USD CHF is going to pile down, right? It's the same trade, but going the other way, more or less. The NASDAQ is reacting bullishly. As a matter of fact, I'm looking at the 30-minute on the NASDAQ, and we did have a pretty rough day. Some NVIDIA earnings were a bit of a miss, but what one could do is still look for opportunities such as these higher lows, right? So what we see happening here is that the highs are continuing to be the same highs. So the bears keep kicking in more or less at the same levels. A little bit of market wildness right there. This candle here overnight's wilding out, probably to do with some kind of news. but mostly it's about the same level where the NASDAQ keeps rejecting. But we do have higher lows, and that's an indication that the bulls, the bulls are the market participants who want price to go up. Even with this while out candle, still we're seeing higher lows. So that's an indication that price wants to go up. Now, there are those who would draw a triangle on this, and try to trade it using those metrics, and that is doable, and there are ways to win that. I don't, at this point in my career, like to use those kind of metrics in trading, triangles and stuff like that. I like to use the triangles as an indication that, this is happening where the bulls are catching up, the bears are just defending, and it's probably going to go up. But there are people who would start to draw, metrics on this and use that for targets. And I mean, yes, you can do that, and there is validity to it. I'm not saying you can't do that. And I'm not saying you can't make money doing that. But that's just my methodology. Doing what I do with algos is far better. I just know it's probably going to break up from here. And if I were trading this, once it broke up, I could either buy the breakout, or I could use, some algo magic and look for it to come like this and grab along pretty easily. So that's possible. And again, I would, you have some messy sort of structure. There's no real structure until this high right here at about 24,065, which is the all-time high. So if the algos are, I mean, technically they're high time frame bullish. They're a little lukewarm on the sort of not as high, but still high time frames. They're a little lukewarm, but they're still technically bullish. So going for an all-time high here is not the worst idea, but I probably would grind out some trades on the way. Before we flip over to the private live lab, I'll go ahead and grab a look at Bitcoin here. Yeah, you know what? I did say, and I'm going to expand on this with the private live lab here. We're going to go to the Algo Factory private live lab. But I did say with this dotted line here that we could see price head up towards liquidity. And at this time, it does look as if that was going to happen. Now, this liquidity box, I've been changing based on the liquidity data going back however many hours it was, in this particular case, about 12 hours. So I can go to the Kingfisher and I can refresh the liquidity here. And we can see that most liquidity is not that far above price. It's moved. It's now at 114 and it goes up to about 116.3. And so it was right at 114, much, much closer to price. And then it goes up to 116.3. Now, this yellow box is where price is going to want to go, and it's not that far away. And now that the algos have turned at least short-term bullish, there's a really good chance that what I drew is going to happen just quicker than I thought, right? So in this case, I just kind of compressed this drawing because that's just what's happened. And then I move the prediction a little bit forward like this. And then it heads down like that. Now, it may not head down, right? As price goes up into this, I reevaluate the whole picture and I decide whether or not I think it's going to head down. As data comes in, everything changes. Price is above 112. 112 is a key area. This could simply be a deviation in the range. So there was a range, and that range on Bitcoin was between 112 and 125, essentially. It did get pushed right back up into that range. You see the NASDAQ also creeping back up. So it may be that there's just a bit of a washout, a bit of a bear trap. A bear trap is what happens when they allow the market to go down or even push it down or nudge it down, whatever the case may be, and it scares people out. It makes people sell. So what that will do is a number of things. For one thing, it's going to allow large players to enter, right? Because they need liquidity. The big players need liquidity, and there's liquidity in this area. And then they push price down, and everybody gets scared, and they're all selling. And the smart money might be down there just gobbling everything up while the scared people are panicking, right? That's how that works. And we might have seen that. Now, what happens is you will get the smart money buying down here around maybe 110, 109, and then it goes up to an area where they either sell or they continue to push price up. Now, this liquidity here in this yellow box, this is all shorts on the leveraged exchanges. And as price goes up, those shorts, if they are triggered, if the stop losses are triggered on those, those shorts will become longs as they exit out, or they will just liquidate. And then, of course, the exchange players make a lot of money. The people who bought right here, the price gets pushed up by these players who are trying to go short, who are short now. And then those shorts may close their shorts, right? As price goes into that, it's either going to stop out, liquidate, or people are going to close as it gets towards that. And those are effective buy orders pushing price higher. And then the smart money will exit once all of that activity is done. And that works across everywhere. One last look at the euro. And this fits the euro as well. Let's go ahead and take a look at our little trade on the euro. And there it is. We are, in profit, certainly. And I think this is a good trade. Like I said, I also think that kind of grabbing moves on the way up, where it's still towards the end of August, the market doesn't have the kind of push right now to just continue up. But I think that a nice opportunity will happen like this. And I may look for kind of a bigger entry as long as the algos allow for it. And then I'll have a better risk to reward because I'll have some structure to play with. And I'll have like maybe a 2-3 to 1 like that. So that's what I would be looking for on this. But this trade that I marked out is as good a trade as any. Could even have a tighter stop if one wanted. But again, follow your rules, whatever they may be. This is just an idea, not investment advice. But this trade is definitely in profit. So look, the way that I do this, there's a lot of understanding of market structure. There's a lot of understanding of market dynamics, as you can see if you were listening to this, but I use algos primarily in my trading decisions, right? So I don't have to think quite as hard about, market maker theory or any of that kind of stuff. I have that stuff as an arsenal. I talk about that live. I do it here on YouTube, and then we go over to the private live lab and do it over there, which has been already started. And by the way, if you're in the private live lab, give me a 5x5. Let me know you can hear me. And outside of that, the algos really, you can almost just watch the algos and ignore everything else. When news comes out, I don't play the news. I tend to let the news just kind of pass. And then once the volatility is introduced to the market and the market has more or less absorbed it, or at least the market starts to ride it, that's when I pounce on that. And that's probably coming here in a few minutes. I think we're starting to see that happen. So here we go, the pullback that I just talked about, where I would be waiting for a better entry on this trade. That pullback seems to be happening. So thank you all for watching. Go get a free algo. Links in the description. Click on the link. Give us a real name, fake name. We don't care. We will send you an algo immediately. And then once you do that, we'll also put you on a list for when we're going to do our free webinar. Now the workshop this time will be free. The first one's always free, and then the next ones will be paid. So keep your eye out for that. We're looking for when the market kind of starts back up in early Q4. I've been putting off the webinar for some time, and we cannot put it off much longer. So do that, and we'll fire off the email to you as to when that's going to be. We'll give you a free ticket, and we'll see you then. Thank you all for watching. Today is Thursday, so we'll be back on Tuesday, 8:30 a.m. EST. Also, if you are on the free algo list, I will send you the weekly market update that I do on Monday. I usually do it after the market has already opened, taking a look at what's going to happen in the week. I tend not to trade Mondays, so I send that off to you as well. So please click the link, get the algo. We'll send you the updates. Thank you for watching, and we will see you Monday.
Join us or die.
Just kidding. You're not going to die. We love you.